Okay, we are joining everyone, all of the people watching us right now on the Facebooks, the YouTubers, and we're having a bit of a conversation. I got my friend Roman here, and earlier today we were talking about this little thing that happened in Canada. One of the largest telecommunications networks went down. You may have heard about it in the news. There's this little company called Rogers. And it seemed to create a little bit of havoc with a lot of people not having access to their phones, their communication devices, the network, their ability to interact, getting online, watching YouTube, all the things that we do on a daily basis because we're basically glued to, one of these little devices pretty much all day long. And it definitely created a lot of chaos. And I think for many people, it created some eye-opening moments for them to recognize the system that we work within. We have a lot of faith and a lot of dependency on
Mhm.
that system just in the telecommunications area. But even like, nowadays, I know people, Roman, and you probably do too, they do all of their banking, even their investment transactions, things of that nature. They're doing it right here on this device. And the moment
Yeah.
that this device isn't connected to the network, they're disconnected from things like their money, their transactions, their stock portfolio, all of this activity, and it can be very, very unsettling when something like that happens. What have you discovered in conversations you've had with people?
Yeah, thank you, Richard. Definitely, I noticed that it was something like out of ordinary, where when Canada actually went in a panic mode, basically because like lots of people, lots of Canadians got disconnected from the real world, meaning that even though they could do some things, but they were restricted in the other things. For example, ATM machines got disconnected. Even some huge, outlets and shops got. They only accepted, credit. They said we don't accept debit. So for me, it was like, an eye opening as well, where I realized so that the dependency on the electronic transaction system is far like larger than I actually imagined. I only thought that this company is only dealing with cell phones. That's it. But in fact, lots of points of sale and lots of merchants, lots of businesses are dependent on fast internet and fast communication. And I had this little like a um, mm, what's it called? It's like saying that I had in my house. That some restaurants and some cafeterias they have those. It says we don't have Wi-Fi here. Talk to each other. Pretend it is 1995. And I think that all Canada pretended it was 1995 last week, right, or beginning of this week. So we pretended that nothing existed. So nothing, like no cell phone existed, no internet existed. So how do we survive in the world like that? And Richard, so my clients often ask me, hey, Roman, we are talking about seceding from the banking system, right? So when we open banking policies, when we open infinite banking concept, when we implement this, but still, the policy loan. When I take a policy loan, where does it go? Can I use it to buy groceries? No, it has to be deposited first in a bank. So in fact, we're still using banks, and then we're using banks for the convenience of debit. So yes, we do not store our money. We don't keep our money in banks, but we rely on banks still for the convenience of debit, for the transactions, for the e-transfers, for many things that we find convenient. And you mentioned also online banking, right? And there's lots of things apparently that may go wrong in our communication between the insurance company, between accessing capital. So the capital is growing, right? No question. If even if we get disconnected, what happens to our capital, Richard?
Still
Does it?
growing.
Yeah, it's still growing, right? But still, in order for us to access this capital, there's lots of things that may go wrong. And we wanted to kind of talk about well, wanted to talk about, how do we prevent not having access to capital? How do we think in advance what we should do in order to not only have our capital working for us, but also have access to it when we most need it, right? So, and there's lots of things that may go wrong. For example, you may be disconnected from cell phones, from internet, even to apply for policy loan. What do you need, Richard?
Yeah, I mean, you really,
You need
what you
internet.
need fundamentally, you need to be able to contact the life company and
Yeah,
verify your
somehow.
identity. So
Yes.
sometimes by the telephone that can be done, or you can request a policy loan with snail mail. You can send a courier to with a loan request and send that in.
Right.
So there's ways of doing it without, you can use physical paper. You can send it in. You can do a letter of direction and sign it and
Mhm.
date it. And even if you need to have someone witness that document and send it in. So there's still ways to access the money from the life company. The life company has rules. They have a method that they do things. And before electronic transactions, before the internet existed, people were still taking policy loans, and they would receive a
Yeah.
check. They would be a check sent in the mail. That
Mhm.
was the way things used to work, used to operate. And so nothing really is changing there. We're simply changing, kind of the it might be a little bit slower, but we're still able to get it done. And ultimately, that's really what matters. That's what we're focusing on. That's what we're helping people understand. They have the ability to do it regardless.
Yeah. I don't know what if your video is still on. I see
Yeah,
that
it's
it is kind of a little bit
I'm just
frozen.
swapping it over because one
Oh, I
camera's not
see.
working. So we'll go to camera 2.
Okay. Yeah, you know what? So let me go on with this. So statistically, 60% purchases in Canada are done by using credit or debit cards. So we are very dependent on using plastic nowadays, and very few people use cash in our society. So our society is moving towards being cashless, right? So we are trying to kind of go away from using cash, and this is where we have some digital risks, right? We have some risks of not being able to access our money, not being able to access our cash. So uh, what we wanted to address, Richard, I'm not sure if you're still on. Your video
I'm
is
still here. I'm just getting the camera working again.
okay. Okay, no worries.
Modern technology works most times, but not every time. Maybe it's because I suddenly got connected to the Rogers network. I don't know.
Yeah, it could be. Yeah, so people say cash is king, but right now very few people carry cash with them, right? So, but when we see this happening, when we see that we are very dependent, and the companies don't really support us as we want them to support us, like for 100% of the time, we want to be online, we want to be connected, we want to be, we want to have access to those banks and their accounts, and have access to our money. Even when we deposited a check in a bank, we want to have access to it immediately. I'll give you an example. So some of you may know that we just came back with my mom. She's Ukrainian. I brought her into Canada, and we just opened up an account for her with one of big banks in Canada. It's kind of Red Bank. You may know what I'm talking about. And we
Yes.
opened an account online. But when I went, so we just needed to go to a branch and then show her passport just to confirm her identity. Guess what? The branch was closed because of the fire that happened at the same street 1 day ago. There was like a huge, massive fire in Steinbeck, Manitoba. And when the fire was down, all the businesses around that block were actually closed for whole week, just
Oh,
because
wow.
of the smoke hazard, smoke and toxic gases and stuff like that. So even just confirming your identity, I'm not even talking about accessing funds, maybe challenging when you rely on on system like banks. And so you want to have access to liquidity when you have it, because guess what? Do the bills wait till you access your cash? No, the bills have to be paid on time. They have to be paid on the 5th of the month, on the 15th of the month. So you have to have this cash liquid, ready, somehow accessible. Even in the case of emergency, you have to have access to cash. So tip number one, what I wanted to say is take your policy loans well in advance. We all know that we want to flow our expenses through our policy loans. Tip number one, take your policy loans well in advance. Give it extra time in order to have the policy loan ready when you need it. We know that the insurance company processes policy loan requests within 3 to 5 business days, but it may take weeks, right? So sometimes when we have like outages like this, you may literally need to send them a loan request by mail, and then expect a check coming in by mail, which may take 2 or maybe 2.5 weeks, right? So, or maybe we can keep some cash at home and just to rely on cash, because if we know how many bills we need to pay, we may need to account for that. We may need to plan for that. We may need just to have cash handy just in case we need to pay those bills. Maybe just go to the Manitoba Hydro, whatever it is, and they just pay your bill on time, right? Or go to another branch, another bank, and then just so that I don't get hit by the NSF fee, right, or something like that. So if I don't have cash.
Yeah, you're right, Roman. And in fact, a really good thing for people to tune into on this is there's a great webinar recording that was done a few years ago, but everything in it is very applicable to today. And it was done by Dr. Robert Murphy, and Carlos Lara. They are 2 of the board of directors of the Nelson Nash Institute. And so they have a website called the Lara Murphy, lara-murphy.com. And in fact, I'll put the website link here in the chat for everybody. They should be able to see that in the comment section. This one goes directly to the spot that I'm referencing. And so they've merged everything to the main website on infinitebanking.org, which is the website for the Nelson Nash Institute. And they did this a few years ago again, but everything that they talk about is 100% relevant to what, this Rogers instance or some of the other economic uncertainty and concerns that people have. I mean, I speak to people on a regular basis that they are legitimately concerned. They're concerned about how governing bodies, how global economies, how large multinational organizations are implementing structures and things that may hinder or create some kind of an issue with the currency that you're accustomed to. And so, we see the advent of technologies like the different kinds of cryptocurrencies. Right now, those markets are in the tank as well, but the fundamental basis of how they're designed or what their intention is around giving people an opportunity to separate from the system, much like the insurance policies are. And so in this presentation, they talk a lot about what's called Exter's pyramid of collapsing values, and where people, there's like this stack, and where people, it's actually inverted, where people go down towards, typically things like gold and silver and precious metals that are physical in nature. And, if I want a chicken to feed my family, and I don't have chickens and I don't have pigs or anything like that, maybe I don't even have a garden, probably not a bad idea to figure that out. One of the reasons I moved to Chilliwack is because there's lots of fresh stuff I could just go get from a local farmer. But, if I go to that local farmer, if I don't have something of value that they will accept, I won't be able to trade. Okay. So maybe I know how to fix lawnmowers and I can fix their lawnmower, or maybe I have a skill that they need and we can barter over that. Ultimately, the currency that we use today in Canada, Canadian currency, it's bright blue and pink and various colors. This is all it does is it solves the speed transaction of how you and I might trade for goods and services. So again, if I go to the car mechanic and I need to rotate my tires and do an oil change and get an air filter and fix my transmission, that mechanic will accept something of value. What he knows of value is the Canadian currency that he charges. But if I can add some other value, like maybe one thing that he really needs is he needs a way to market his business and build a system that automates so he can reduce his cost of employed staff or optimize the growth of his business. Well, if I can bring that skill set to him, perhaps him and I can create a new arrangement where I will provide services in retrade for services. That'll take longer, but ultimately everything that we do on a day-to-day basis transactionally, we don't see it, but effectively that's what's happening. The difference is we're utilizing a currency mechanism that is well known and consistent across the board that allows us to do that at lightning speed. And so talking about Exner's pyramid of collapsing values, Roman, you and I were talking about things like gold and silver. So, here I have a Canadian silver coin. It's a Canadian maple leaf coin. This one is a $5 coin. It's 99.99% pure. You can see a little, quadruple 9 on there. I have another one that I also like. These ones, they're good. These are an Austrian coin. Again, very, very similar kind of structure.
Nice.
And
is it silver?
It is. It's silver. Yeah, you bet. Yeah, these are both silver. You actually should be able to see it says silver on there. I don't know if the glare can show it or not. But, so I have these in these little things here. These are a sleeve. And typically, I think this one's got 25 in it. And I can't remember. I think this one has 25 as well, or 20. So like myself, and I know a lot of other people, I know a lot of clients, I have friends and colleagues. Well, they will have a format of bullion in some format where it's usually physical. Now, Nelson even he would tell a story about this back in the day, and although he was fond of this thing, he recognized that it didn't matter in the same way that his policies mattered, because he can't control the market price. But I don't have these things as an investment. I have these things so that in the event we have a short-term, currency-related crisis, people will go to the collapsing values and they will look to find a way to conduct business in the short-term period. Maybe it's a month, 2 months, 3 months, 6 months. Maybe it's 1 year as the world kind of figures its way back through and we get back to some, whatever some format of normal is, not unlike we've done through COVID, but just more in relation to how the currency moves through the marketplace. And so if I have enough of these in place, well, I can go and exchange it with a farmer, and I can't get a whole cow, but typically in a situation like that, the value of these things also goes up proportionately because that value is based on a supply and demand. So the demand goes way up. And so the people that have supply, what I can exchange this for today versus in a situation where the currency is not doing so great, what I might be exchange it for at that point in time might be a much higher value. Maybe this will get me a whole cow, or it'll get me a quarter of a cow that I can put in my freezer and feed my family. So, I'm not trying to suggest that everyone just run down to your corner pawn shop and go buy a bunch of gold and silver, but understand that how you have money flow. And if these are things you're actually concerned about, you should be getting some education on what are some things that you can do to protect yourself in that environment. And the only thing I would suggest is that if you're going to go acquire something of this nature and you're going to be changing how you hold some of your currency, what we're doing is we're moving it from Canadian paper electronic currency into tubes of silver coins or gold bars or whatever that thing is that you want to use. I mean, gold bars are cool and all, except I've got a little remote here. And if this was like a gold bar, it's kind of hard for me to go down and just shave off some into a scale at the car mechanic and say, okay, is that enough? Meanwhile, the car mechanic's looking at this gold bar. I'm like, no, that's not enough. I wouldn't want to be walking around town with this lugging a, 20-pound gold bar around. Right. So, things to think about.
Yeah, exactly. So yes, gold is great. It's kind of real money. It is divisible, but it is not divisible to the point where you can, chip away enough to buy, bread or to buy milk, right? So there has to be some replacement for gold, or some universal exchange for gold, so that we use it. And that's how the banking system, came to life. And so having gold and silver at home, or having access to liquidity at home, is also basically seceding from banking system, right? Because you're not keeping that money in a bank where things may go wrong and you may not have access to it. And then the things that may go wrong, actually, not just communication outages. It's like earthquakes, right, or hurricanes. If those hit, and the probability of those are actually pretty high, and so we may also be cut out from traditional system where we have access to everything when we need it. So yeah, so talking about that, yeah, I also have some silver coins. I may not have enough because I have a big family. So this one is a silver Canadian coin, $200, and I have more of those. I have just a couple of those coins just for collectibles. They were kind of bothering me, when I discovered the infinite banking concept for myself, because I realized this money isn't growing in a policy. But after this happened, after the outage, after this craziness that happened, I look at it a little bit differently. I realize that I may at some point need to have access to it, because it is what I need to pay for stuff, right? At least this is my last resort. I'm not saying that everyone should do it. I'm just saying that we need to plan in advance for our future expenses, and don't do last minute preparations for your policy loans, because you may have some delays accessing money from insurance companies. Just plan in the future. Be wise. Think maybe give it more time, just to have enough time on your in your plate to have access to the funds.
Yeah, and I mean, at present we don't have delays like that we experience, but the takeaway is that again, using the Rogers example, things happen, and you just want to recognize that it could take longer. And further to that, we always suggest that people should plan at least 30 days in advance of their need of capital anyway. We all know that things come up, and transmission goes on the car. I mean, that happens. You didn't plan 30 days that the transmission would go on the car, but you could use a line of credit or Visa to pay the mechanic, and then you can make your loan request, and then make sure you're planning with enough time for these things to come in. Another thing I think it's helpful to understand is, just circling back to what we talked about, receiving a check and snail mail, meaning like, you're waiting for Canada Post to deliver your letter to the life company. Hey, give me my policy loan. And you're waiting for them to truck it back on a horse or whatever back to your house. And if you have you have a check, it's also important to recognize that there are, at presently anyway, some other ways that you might be able to cash that check. So you might be able to exchange. You could sign that check over to some other places. Like sometimes you can even go maybe to the, let's say it was RBC that issued the check from the account. You don't bank with them, but often you can go and get them to cash that check, even though you don't have have an account with them, because they're the ones that issued the check. So that's an option. Sometimes you can go and do it at a retailer. So even like Walmart, I've heard does that. They'll do it with not every type of check, but pre-printed ones, payroll checks, government checks, cashier's checks. These are many of the types that they will do, and there probably is other retailers that would do that. There's an option maybe that you could load funds onto a prepaid debit card as a possibility. You can go to a check cashing outlet, so kind of like the payday marts, payday cash loan type places. I mean, you're going to pay a fee for that, but if there's an issue where you're currently unsettled by what's going on in the traditional banking system and you don't want to go and insert more capital there, then there are other ways, if you recognize and be creative, that you could go and still get that policy loan cash. So just to give you some context on, getting people thinking about what are some other options that we can use to still turn that policy loan value that's in a piece of paper into some kind of currency that we can work with.
Yeah, absolutely. And what I love about also being a policyholder is that when this craziness happens, the market may change. The market may go down, especially telecommunication sector may go down because of this market crash. Investors may panic. Also, they may sell, stocks. And the beauty of it is that I don't really worry of the telecommunication sector going down. If because in my policy, my cash value is going up regardless of what's happening in the stock market, right? Because all the risk is with an insurance company. So me being a policyholder, I don't have risk of ups and downs of the market. That's why yes, I may be temporarily not able to have access to immediately to borrow from the insurance company. Maybe it will delay me a couple days, maybe a couple weeks. But that's fine. My capital is still intact. It is still growing every day, regardless of what's going in the world. Would you not agree, Richard?
Yeah, and I mean it's also I mean in comparison, I think about a contrast to that, and so people often they think about their equity and their equity. When you hear the words equity, most people think about a house or their home. The brain usually jumps to home equity,
Yeah.
and a lot of times people don't realize that their equity is trapped inside of the walls of their home. And so even considering in many areas of Canada, we've had these rapidly sharp inclines in the real estate market. And those real estate market inclines have been, they've been very, very different. Like they've been very changing and dynamic over the course of the last period of time, where people are sitting on much more home equity than they had previously, they had before. However, if that market shifts, so right now we just had a huge increase with the Bank of Canada, the largest increase in, I think they said it was about 20 years, a 1% increase in the overnight lending rate. Well, that's going to immediately reduce the buying power of any new purchaser, any new buyer. So if you're looking at selling a home, in that market, well, now the amount of people that could have bought your home at that price, boom, a whole bunch of them just got eliminated from the marketplace. So supply and demand. You have a supply of a house you want to sell, but the demand for who can actually, the amount of people that can actually close on purchasing the house for the value that you want just got obliterated. So these forces have a way of impacting values in a real estate market. Mostly it's a supply and demand situation, but the interest rate has a cost on borrowing and the payments of cash flow, the monthly payment situation. And so the qualifying criteria increases. And if there's not the income cash flow to support that, the amount of, you could buy this size of house, yesterday and now, or 2 days ago with the Bank of Canada increase, now you can only buy this size of house. That's basically what's happened. So anyone that has a size of house that's up above here, the amount of people that are interested or want to buy your house, they might still want to buy it. They just can't close on it because the bank won't give them the deal. So recognize that home equity, it can be frozen and you don't control the size of it. You can control your mortgage pay down, but you can't control the value of the property. Whereas in the Par Whole Life situation, because of its structure, because of its design, because of its contractual nature and the bulletproof guarantees attached to it, that thing is going up each and every day and you can't stop it. The only thing that stops it is if somebody dies, the insured person, in which case you get more money than you put in anyway. Or if you voluntarily as the owner choose to collapse it. And that's like having a gold mine that you own. And you all of a sudden walk over and you decide, you know what? I didn't actually get a chance to put my shovel in here and check and look for any of the gold. I'm just going to go ahead and I'm just going to close it all out and I'm going to hand it over to somebody else. I don't think too many people would want to do that if you knew for a fact that you had the reports, the data that boom, there's gold in that thing. You don't want to, get rid of a gold mine that you already have in your hands. So that would be kind of my final thought. And I mean, ultimately, it's important to have these conversations. Roman, you bring a lot to this because of your experience living in other countries outside of Canada. And so I think I love having conversations like this with you because there's things that you've gone through that you've seen your family members go through that I have not experienced. I've had it really good here. Being Canadian my whole life, I've lived here my whole life. I've had a wonderful and amazing life, and I know things like that happen in other nations and other countries. You hear about them, but hearing about it and experiencing them is different. So you being able to share your reference point with our listeners, yeah, I just think it's really, really, it's an amazing thing that you're volunteering to do that, because your perspective adds a tremendous amount of value.
Thank you, Richard. Yeah, and I just wanted to kind of also finalize my thoughts that, hey, we just need to be prepared for the unexpected, events. We just need to be a little bit more aware of what's going on in the world, where someone can just take a switch and put it down and turn off the lights. But the beauty of it is that our system that we are building, that we're growing our families and businesses, is growing regardless. We just need to have a little bit more time, potentially accessing this cash. But hey, to all our clients and our listeners, that's not a huge deal. So we are not, locked out of your money. You want to just rest assured that your money is still growing. It is intact, and the insurance company has been through all of these crises and all of these uncertain times for many, many, many times during decades and even centuries. So we just need to plan for it. We just need to be aware. We just need to be ready.
Be prepared and be ready. Love it. Roman, thanks again for doing this. This was great. To everyone who tuned in, hope you had an amazing chat with us today, and we look forward to you tuning in again next time. Make sure you take a look for some of the other content that'll probably be popping up on the screen here shortly for you. And as always, continue your journey of learning.
Cheers.